Economic indicators are pointing to 70s-style stagflation as the least bad result of President Trump's policies. Economic growth at sub 2% is anemic, and it's not supposed to get any better in 2026. Inflation is picking up as the Trump tariffs take effect. Companies' input price increases are gradually being passed through to customers, boosting inflation gauges like the CPI, PPI, and PCE. Consumer spending makes up nearly 70% of U.S. GDP, so the condition of the American consumer is of utmost importance. Adding consumer spending together for the first 2 quarters of 2025 gives the worst 6-month stretch of consumer spending since the last half of 2022. Manufacturing data is weak, and the U.S. labor market has stalled, but U.S. stock markets continue to run hot. The Trump administration is changing the rules around private equity to allow more retail investors into a risky space and is reducing investors' minimum margin account balance requirements to $2,000 from $25,000 currently. Margin debt in U.S. stocks has crossed the $1 trillion mark for the first time. Trump is highly motivated to get the Fed to cut interest rates so that he doesn't have to finance the national debt at higher rates when U.S. Treasury bonds roll over. Trump nominated Stephen Moran, chair of the Council of Economic Advisers, to replace Adriana Kugler on the Federal Reserve Board of Governors. Fed Governor Christopher Waller, viewed as more dovish, could be Trump's pick to lead the central bank, reinforcing expectations of easier policy. Lower interest rates will further fuel the retail speculative gambling bubble. Retail investors are being set up for a huge and costly reckoning. Whether it happens now or later, interest rate cuts will be a tailwind for precious metals. Could there be a better time for owning precious metal juniors? Thank you for watching. Retail investors are being led down the garden path,